The Purdue University CME Group Ag Economy Barometer Index rose 8 points to a reading of 148. That's just 4 points below the recent peak of 152 back in February. The Current Condition Index rose 9 points to 141, and that's the highest current condition index since December of 2021. The Future Expectation Index rose 8 points to 152. Expectations for the future remain higher than current conditions, but that gap has narrowed appreciably since last fall. The Farm Financial Performance Index fell a trivial 1 point to 101. That leaves that index still 11 points higher than it was in October and 33 points higher than it was back in September. The Farm Capital Investment Index rose 7 points this month, and that provided the highest reading since May of 2021. If you look at the responses to the question that index is based on, over the course of the last year, the percentage of people who report a good time to make large investments has more than doubled over the last year to 25%, while the percentage saying it's a bad time to make investments has fallen from 80% to 64%. However, when you look at what's taken place with respect to farm machinery sales, especially here in early 2025, they are down dramatically, and it appears that group who reports it's a bad time to make investments, that roughly 2/3 at 64%, is probably dominating actual investments in things like farm machinery. The short-term farmland value expectation index at 110 was down 8 points from March, but remains in the trading range of about 110 to 120, suggesting that farmers remain cautiously optimistic that farmland values will either increase modestly or hold steady over the course of the next year. We continue to ask producers what their biggest concerns are for their farming operation in the upcoming 12 months, and higher input cost remains the top concern among farmers, but it's notable that the percentage of producers reporting concerns about availability of inputs has started to shift. As recently as last September, just 3% of the producers said they were worried about availability of inputs. And this month's survey, that is now up to 10%. We asked several questions related to the imposition of tariffs and what impact it's having on their farm operations and the U.S. ag economy. 56% of producers think tariffs will wind up reducing their farm's income in 2025. We also included a question that says, if a trade war leads to lower prices for U.S. ag products, how likely do you think it is that farmers will receive compensation similar to 2019's market facilitation program? 80% of the producers think a program similar to MFP will be implemented to help compensate losses. That's up from 70% who felt that way a month earlier. We asked producers if they thought it was likely that they would have trouble obtaining some of the farm inputs that they normally purchase, and 53% of the respondents in this month's survey said they were concerned about the possibility of having difficulty obtaining inputs. Those producers who responded that way received a follow-up question to ask them which inputs they were most concerned about. The top choice was fertilizer at 37%, followed by parts for farm machinery and electronics, and crop chemicals, which were virtually tied at 27 and 26%, respectively. Finally, 70% of the producers said they think in the long run, tariffs will actually wind up strengthening the U.S. ag economy. That wraps up the highlights for this month's survey. You can get the full report on our website, purdue.edu/agbarometer, and you can also get more details on our Purdue Commercial AgCast podcast